Hi Trader Girl. I hear you want to know about trading. What would you like to know about? It is a huge topic.
I want to hear about the bulls and the bears. I hear they are in a battle all the time.
Yes, it seems everyone thinks it is all about bulls who want and expect the market to go up and the bears who want and expect the market to go down. This oversimplification has confused a lot of people.
But they talk about the bulls and bears every day in the financial news. What is confusing about it?
It would be a lot better if they really told people the actual rules of this game called trading. Would you like to know the rules to this huge game?
Wow, I would love to hear it. I am hoping to make a living with my trading and would like to never have to work in a normal job again.
If you can do that, you will be a true professional trader. Not many retail traders make it to that level of success. I will try to help you understand the rules and what you need to learn.
Please.
Trading is like a huge auction game. There is an unlimited number of players in any one market. Each player must buy into the game to be able to play. This means have a funded account with a broker for trading. There are 3 teams in the game. The bulls who think the price is too low and it will be rising soon. The bears who think the price is too high and think the price will fall, and the players who are on the bench waiting to figure out what team to join.
That seems simple enough, very much like what they say in the media.
Yes, but this is only the beginning. The next thing to keep in mind is when you are on the bull team and the price is going up, or the bear team and the price is going down, you are building up potential profits. However, none of these profits are realized until you either switch teams or exit your position and go to the bench. It is the timing of this profit-taking that makes you a successful professional.
Wow, I never thought of it that way.
Most people never do. So, can you see? There are really no permanent bulls and there are no permanent bears. They have to exit the game or switch sides, or they will not realize any profit.
Thanks. That helps a lot. You mentioned it is an auction game. How does that work?
Well, the price is always determined by what the buyers are willing to pay and what the sellers are willing to accept. If one player wants to sell at 105 and there is no one who wants to buy at that price, the seller will have to wait until there is a buyer at 105 or lower his price. This happens thousands of times each day and moves the price up and down tick by tick and dollar by dollar.
Thanks again. Tell me please, what is the difference between a retail trader and an institutional one?
Good question. There is a huge difference. The retail trader normally has only a small amount of money. An institutional trader has many millions of dollars to use. This money is used to purchase or sell shares, contracts or options. The institutional trader can use this extra money to move the market far more than a retail trader can. On the other hand, a retail trader can quickly get into and out of the market without worry of moving price. I will tell you more about this later. But first, one more important thing.
What?
Both retail traders and institutional traders can choose one or more types of trading to perform. Some are investors and take positions for the longer term. Some are swing traders and look to get into and out of the market over days or weeks as the market swings up and down. And then there are the day traders who may only be in a trade for seconds to minutes or hours, but they are always out of the market before the end of the market day.
It sounds like I need to keep in mind all these different competitors and their reasons for trading. Perhaps it will help me understand them and how to win my trades.
Successful traders do exactly that. They understand the motivation and psychology of the trader on the other side of the trade and the time frame being traded.
Psychology. How do they use that?
Experienced traders know that the market is driven by the greed and fear. These two strong motivators can be manipulated by the big players in the market.
How would they use this to win trades?
Before we get to using fear and greed, let's think about the tools that traders use to increase their odds of winning. We both know that a coin toss is a 50-50 bet. On average, 50% of the time heads, and 50% of the time tails. The stock market is like this in that at any one moment the price can go up or down equally.
So is it really like tossing a coin? 50-50?
No, that would be gambling, and only casinos base careers on such things. Successful traders find tools to use to increase the probability they will get better than 50/50 odds. I am sure you have heard about the trend is your friend, double top or double bottom, or various candle types. Each of these are tools that can be used by the trader to increase odds of winning.
How many of these tools and indicators are there?
Hundreds. And it is up to the trader to sort through them and find the ones that help. You should remember though, all of them are derived from 6 simple things. The chart time frames you are sampling, the high, low, open and close price and volume during the time frame. There are a few indicators that seem to be predictive but they are not really.
So there is nothing else people use to trade?
Actually there is. News and events that make a difference to that market. Sadly, for most retail traders they get the news too late to make any quick trades, and by the time they know about the news it is already in the current price. And one other thing of course for the longer-term investors, and that is the fundamentals.
What are fundamentals?
Well, there are many things depending on what market is being traded. In the case of a stock it is things like company management, company performance and profit per share, or how they lead in their industry sector. If you are interested in investing, do a web search and make sure you always check out the company website and annual reports and analyst grading for that stock.
I kind of like the idea of day trading, but I have heard it is risky. What do I have to be concerned about with day trading?
Careful day traders have less risk than longer-term traders, but only if they pay close attention to both the market and their trade management.
What is an HFT? I have heard they are dangerous to day traders.
HFTs are high-frequency trading events. A huge momentary, high-volume move in the market. The big boys use these to make profits in seconds. Imagine for a moment, you have lots of money and 2 accounts. In one account, you sell at a slightly higher price. In the other account you immediately buy from yourself in the other account. You have not lost or gained anything yet. But if you have the money to do this, it will inflate the value of the stock and the volume will increase. This will cause other people or computers watching the market to believe the market is really moving up, and their greed will take over and they will buy into this falsely inflated market. Once enough of these other users have joined in driving the prices up, the original trader sells his shares for the now better average price and makes just a few cents per share, and then watches the market come back down to the true value again.
Is that the way all HFTs work?
No, it is just an example of how it is sometimes done. Of course, institutional traders will try to hide their order flow to mask what they are doing. Or other institutional traders will take their profits away first.
This sounds pretty scary. Can my stop-loss keep me from being hurt by one of these fast trades?
Well, sadly, it can't. If an HFT moves the prices very fast, you will not be able to get your stop filled at market price until it is well past your stop price. So, the risk management you thought you had protecting you may not protect you at all.
No wonder so many retail traders lose in the market.
The only way for a retail trader to win is to have a valid, tested, consistent trading plan and then trade that plan. The plan must include risk management, money management, trade journaling, and contingencies in case of equipment or network failure.
Wow, and I thought all I had to do was fund my account and trade. Anything else I need to know about this game?
Continue to study trading in your own mind as well as the instruments you plan to trade. Backtest using historical data to prove your trading plan, risk management and money management really works. Trade in your paper money account until you are sure you are profitable, and then start very small with real money. Please remember, retaining your capital is your most important job. Without your trading capital you will no longer be a trader. Increasing profit is your second job.
Wow, thanks for all this. That normal job I have is looking pretty good right now. How long does it take for a retail trader to become professional?
Another good question. Of course each person is different, but in Malcolm Gladwell's book, Outliers, he says it takes 10,000 hours of practice. Justine Musk says it really means 10,000 hours of deliberate practice. In any case, if you think you are going to turn into an overnight success in trading, you better live on a planet where the nights are 10,000 hours long.
Wow, that makes it sound almost impossible.
No, Not impossible, but certainly very hard. It is like any new career. It takes a long time before you can do it intuitively and successfully on a consistent basis. The sooner you start, the sooner you will learn to be profitable.
Thanks very much. Time for me to start the rest of my training.